Good afternoon and welcome to NYFP. In midday trade, Wall Street continues to rally with the Dow Industrials up by over 100 points. Joining me this afternoon to weigh in on the action is Peter Costa of Empire Executions. Peter, good afternoon and thanks for joining me today.
Thanks for having me, Remy, on this historic day.
Well, as you mentioned, we did see a new intraday high for the S&P 500 as well as the Dow Industrials. Earlier we saw a move up to the 14,800 level.
Right.
Now, given that the FOMC meeting minutes came out earlier today, we have that event risk out of the way. So what do you make of what we're seeing right now?
Well, you know what it is, I think this is another round of underlying buying pressure that hasn't really entered the market. As we spoke before we went on the air, what I'd be concerned about is if we had a 250 point or a 300 point move on the upside, because to me that just denotes that a lot of people start throwing their hands up saying, I missed this, I got to get in it, and that's usually the wrong thing to do. But market's up 150 and 120 at the end of the day, all-time highs on both the S&P and the Dow. Actually, that's a very positive sign for me.
And as you mentioned, we'll continue to see where the stock averages close after today's trading session. I do want to take a closer look at central banks. So we did get supportive action out from the Bank of Japan, and as a result, we have been seeing some fluctuation in the currency markets. And the central bank meeting minutes out from the Fed also showed a divided FOMC. So what did you make of the commentary out from the Fed?
Well, actually, I was kind of surprised. I wasn't surprised about how divided it was. I was a little surprised at how adamant both sides are. And I think that there is a line being drawn in the sand right now. You know, obviously, we have to listen to what, Chairman Bernanke says more than anything because he's the deciding vote. But it was very surprising to see that the adamant nature of both sides. You know, and to me, I think you'd want the Fed to be on the same page going forward, but I think they were on the same page for a long time. Now I think that some guys are finding that this is, maybe we're getting towards the end of QE, whatever number it is. Operation Twist should be wound out. So, I think there's a lot more, there's a growing influence in the Fed that wants to end this situation and let the economy, take its course.
And it's not surprising that some of the comments from the FOMC meeting minutes did highlight concerns about financial stability, especially given the run-up in equity markets. Right. But one thing I do want to mention is that it is earnings season. We did get mixed earnings out from Alcoa, and we'll be getting results out from Wells Fargo and JP Morgan. Now, expectations have been eased back for this earnings season, but are you concerned going forward? Well,
you know what it is, I think that everyone's actually honestly tempered their their expectations for this quarter, and I think that's a good thing. I don't think it's going to move the market positively because there's not going to be that many surprises, where last quarter we did see a lot of surprises, and people were cutting estimates, companies were cutting estimates, and then they beat a lot of these companies beat estimates. I think every company, or not every company, but I think a lot of companies are probably going to be right in line of what the analysts' expectations are and what they've said, going forward. I think what you have to look for is what their second and third quarter review is. When they look at those quarters, how do they see their businesses in 4 months or 6 months? I think that's what's going to be important. And I haven't really seen. Alcoa was pretty positive looking forward on a going forward basis. Now, if you get more like from Wells Fargo and JP Morgan, that could also be that could also put a nice floor on the market.
And while we are sticking with company news, we've been seeing interesting action yesterday morning as well as today. Today we did get several IPOs, but we also saw some interesting action in terms of Herbalife as well as Skechers. Now, I won't go into those companies, but in terms of sectors, are there any interesting trends that you're seeing out there?
Well, one of the trends, and I've been saying it for the last probably a year, is the healthcare sector. It's the best performing sector in the S&P, and I think that's going to continue. I think that there's been, for 4 years during the financial crisis and after, the healthcare sector performed fairly well. They've really busted out over the last 9 or 10 months. So I think that sector is still one I want to be involved in. And then you got to go back to technology. You want to start being back in technology. I think, take Apple out of the picture. There's a lot of very, very good companies that are fairly priced in the tech sector. So I think that's something that people should look at.
Okay, Peter, well, thank you so much for your analysis today, and thanks for weighing in on the market rally.
Well, thanks for having me again.